played out. Is it much more difficult getting stocks right now? I think that is the basic nature of investing. When you want to go out and buy, things are not cheap. When you're feeling scared and want to invest in fixed deposit, that is exactly the time when things are cheap. So I think what's interesting for me and what stands out for India, and we wrote a piece about it called The Joy of Rowing Downstream, is that India offers a unique combination of growth and acceleration.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup. So let's see what the markets are doing. Weak handover from the US markets, Asian markets also not doing well. So let's take a look at the SGX Nifty. The SGX Nifty is trading down 26 points. Nothing much changed, but just managing to come above the 10,200 mark. So it's a weak handover from the global market. So that's what we're seeing. As far as the ADRs are concerned, Vedanta ended down almost 4%. There's been a big commodity sell-off that's happening, and money seems to be moving back into the defenses and IT. So Infosys and Wipro, both of them were higher by close to 1%. So that's where money is moving in. Crude seems to be the big talking point. Crude is trading lower by almost 1% in the morning session. Overnight, it cracked almost 2%, so down almost more than 3% in the past two trading session. The US stockpile data that came out indicating that there is significant amount of oversupply, and that is causing crude to crack. WTI, Brent, both of them trading much lower. The big other story is the sell-off as far as commodity is concerned. Weak closing by the base metals on the LME. Just take a look at some of them. Nickel was down 6%, lead was down over 2%, so there's clear weakness seen. The other base metals that you're watching include, aluminium, copper, zinc, down anywhere between 1 to 2%. COMEX copper is trading weak currently. China has opened and the Qs don't look good. Weak opening by the base metals in China. Rubber is down almost 6%. Steel is down 3%, copper is down 2%. So there is enough weakness that's happening as far as the commodity pack is concerned. Gold has surged for the third straight session. Money seems to be moving back into safe haven. So that's what we're seeing. Flows, FIs are net buyers to the tune of almost 2,500 crores in the cash market, and this will include the big Bharti Blal deal that happened. DIs were net sellers to the tune of just 1 crore. This is the net figure. So if you look at on a month-to-date basis, FIs have been net buyers to the tune of 9,600 crores, and DIs have been buyers to the tune of almost 1,500 crores in the cash market. We ended up below the 10,200 mark in trade, so the Nifty was rather weak. It was down almost 40 points. Pharma as a pack saw a lot of selling. It was down almost 0.6%. So Pharma as a pack was rather weak. Infrastructure stocks saw a lot of selling. So overall on the Nifty, we were down almost 40 points. Reliance, Axis Bank, Hero contributed on the positive side. L&T, HDFC Bank and TCS were the contributors on the weak side. But what's the FNOQ like, Agam?
Well, we've lost out on the 10,200 mark as far as the Nifty is concerned, so some weakness has seeped in. There's no doubt about that. And along with that, we have seen longs unwind in terms of the Nifty futures as well as the Bank Nifty futures. Coming to the Nifty Bank as well, we have seen unwinding of as much as 2% there. When it comes to the matter of the VIX, naturally and predictably, it has moved up above the mark of 14. And considering the fact that we saw the Nifty come off, we also saw the Nifty put call ratio come to now on the mark of 1.18 from 1.22. Moving in, when it comes to the changes in open interest, as one might expect, we have seen more unwinding in the 10,300 and the 10,200 puts. On the other hand, more writing in the 10,300 calls. So that is one area, or that's one level we're all watching out for. But moving in terms of stocks, we have a new entrant in the F&O ban. So we have Kaveri Seeds coming in. On the other hand, we also have Jet Airways moving out of the F&O ban. Do watch out for Repco Home Finance, which had a very strong day of trade yesterday. While the stock moved up as much as 6.5%, we also saw near 25% gains in open interest. So we will be watching out for those as we move into today's day of trade. But that's as far as the markets are concerned. Bloomberg Quint's Neeraj Shah caught up with Chris Woods, and he has a lot to say about India's outlook. Listen in.
Let's assume it's ceteris paribus, Chris. We don't hear too many disruptions. What about India individually? We perched well and truly above the Mount 10,000. Valuations a bit stretched. Earnings in Q2 not as bad as Q1. Do you think the numbers start showing themselves in the second half and will justify the kind of valuations that we are at currently? Is it possible to be able to predict and forecast that?
Yeah, well, I'm still comfortable sitting with I've got a structural 3 times overweight in India in my relative return Asia ex-Japan portfolio. I'm still comfortable with that. I did reduce that overweight a bit actually at the start of this quarter, precisely because the valuations were high. However, I restored it back to a triple overweight when we had the announcement of the bank recap. In my view, that was the missing link in the Indian equity story. I think there's been a huge number of positive reforms introduced by the Modi administration since the BJP government took power. But there's been one big missing link, one failure amid all the many successful reforms they've introduced, and that's been the almost total failure to address the problem in the banking system, which actually was inherited by this government. So in my view, that is the chief reason why the investment cycle has continued to trend down and why bank loan growth has been running recently below nominal GDP growth. But obviously, we've now had the announcement of the bank recap. So assuming that is implemented, that I believe creates light at the end of the tunnel.
Stock of the day is MOIL, a good set of numbers coming in from the company. If we're just supposed to run you through the basic set of numbers, look at the revenue. That's a 287 crore number that we're looking at, and a jump of nearly 46.4% on year-on-year basis for this company. Well, a good mining product revenue segmentation on year-on-year basis has gone down well in the overall revenue of the company. If you look at the second graphic, which is about the profitability, you would see that is shot up by 123% or year-on-year basis to 92.7 crore as compared to a number of nearly 41.5 odd crore. Also, if you're supposed to look at the operating profit, that's a good performance coming in from the company. It's a good 547% jump that we're looking at 116.5 crore for this quarter as compared to a figure of nearly 18 odd crore in the corresponding quarter. Margins have expanded to 41% as compared to 9.2% in the corresponding quarter. So what goes behind the making of such good set of numbers? Well, growth in high yielding mining products revenue has led to overall a sharp uptick in your overall revenue. If you look at the mining segment, that's almost risen by 96%. Now, higher revenue combined with your lower raw material cost have translated well into the operating performance of the company. Raw material cost, for that matter, it's come down by 81% on year-on-year basis to 633 crore in this quarter. Now, operating efficiency combined with your top line is reflecting well in terms of the net profit of the company, which has risen nearly more than 100%. Also, if you would look at the segment-wise breakup for this company, you would see maximum contribution in terms of sale is coming from the mining product segment at around 96%, while the remainder is 3% is coming in from the power segment, and for that matter, mining is just 1.39%. The same is true in terms of the operating profit for the company. Power contributes contributes now to 0.63%, while the other contribution is 3.21%. If you look at the mining product, that's a 96.14% growth out there. Some really good set of numbers coming in from the company. Also, if you look, the stock has run up quite a bit from where it was in the last 6 months. Almost a 60% jump is what we're looking at for this counter. This is on account of the government push towards the maker for providing, having enough technologies to build upon the manganese requirement for e-vehicles batteries. To give you a little background about what the company is, well, it's a manganese ore producer which has a market capitalization of around 6,600 crore, and the opportunities in e-vehicle segment is what bolstering growth for this segment and the company in particular. With this, let's toss it over to Jayesh and Saloni for commodity and currency market update for further updates.
Well, it's a sea of red as far as the commodity space is concerned, except for the precious metals. Starting off with oil prices, which have seen a sharp low downtick come about for them. In Asian hours, trading about 1.5% lower after a more than 1% cut overnight that we saw for both Brent and WTI. Now, this is on the back of an unexpected inventory data buildup that API is likely to report. So we understand that API is likely to report an inventory buildup of as much as 6.5 million barrels for last week. Moving on to the base metal space, we saw the index itself close about 2% lower, which was the lowest level in over a month. Now, the decline was led by nickel, which declined the most since 2016 March and fell about 5.5%. If you pick up any other industrial metal, it was down 1.5%, and similar cues can be seen on the Shanghai Futures Exchange, where even rubber prices are trading at a 2-week low, down about 5%. Moving on to gold prices that have seen some bit of green come about on account of the other base metals falling. But staying with oil prices, let's go across to Fatih Birol of the IEA, who sees that the United States will most likely be the largest oil producer in the next decade.
Let's say in the next 10 years or so, U.S. Total oil production will reach about 17 million barrels per day, and as such, there will be a big difference between the United States and the second biggest producer. What we also see is that in the next 10 years, more than 80% of the global oil production growth comes from the United States only. As such, we believe there will be a lot of oil in the markets, and will put downward pressure on the prices. And in terms of natural gas, it is the same story, a similar story. The gas production, shale production in the United States will increase substantially. And again, in 10 years of time, the difference between US and Russia will be more than 30%. US will produce more than 30% gas than Russia, and lots of LNG exports will come to markets and redefine the global gas markets operations and the prices as well. So a big upheaval in the oil and gas markets driven by the shale boom in the United States.
Well, that was Fatih Birol, but Saloni Dhanuka now joins us to give us a take on the currency space.
So the rupee yesterday retreated from its 6-week low, and it ended flat at 65.42 levels against the dollar. Now the home currency had lost almost 48 paise in the past 2 trading sessions due to strong dollar demand. Also, sustained unwinding by foreign investors along with rising crude oil prices largely pressurized the rupee. On the global front, the euro trades close to 2.5-week high of near 1.18 levels against the dollar on the back of better than expected German GDP data. Now the strength in euro pushed the dollar lower at 93.90 levels, well below its overnight high of 94.50 levels. Now investors await US consumer price inflation data, which is scheduled to release today evening. Coming back home, dollar rupee is trading flat in the non-deliverable forward market. Moving on to the bond market, the 10-year bond yield closed over 7% for the first time in 14 months on the back of inflation increased more than estimated, and which further reduces the chances of a rate cut by RBI in the near term soon. And lastly, global funds increased their rupee debt holding for the first time after selling for 6 consecutive sessions. They infused close to 860 crores according to NSDL data.
And amongst the stocks that we're tracking includes Indiabulls Housing Finance, where it has sold its 10% stake in Oak North Bank, which is UK-based bank, for about 770 crores to GIC Singapore. Now, they have said that even after this stake sale, they remain the single largest shareholder in the company. They've said that the remaining 20% stake in the bank is valued at about 1,510 crores. Do remember that Indiabulls Housing Finance Management had told Bloomberg Quint about a month back that they're looking for an IPO for Oak North Bank, and the timeline that they gave was 18 to 24 months to watch out for that stock. That apart, the next stock that we are tracking includes HCL Technologies, which has received a 5-year contract with Jardine Lloyd Thompson Group, so that's a name to watch out for. We also have L&T Infotech, where the company has said they will acquire Syncordis and its subsidiaries, and this will be for a total value of 15 million euros. Now, the deal is expected to be completed in about 6 to 8 weeks, and there will also be a consideration, additional consideration of $13.5 million spread over spread over the next 4 to 5 years, depending on the performance of the subsidiary. So performance of the company, so watch out for that name as well. And lastly, we are also tracking Laurus Labs, which has received US FDA EIR, which means clearance from the US drug regulator for its units in Visakhapatnam, that is 1 and 2, and this is for the inspection that was conducted in August 2017. So you could see some positive reaction there. So these are some of the names that you should watch out for.
Electrosteel Steels, the Kolkata-based stress steelmaker, has found interest from 3 potential bidders: Edelweiss ARC, Piramal Group, as well as Tata Steel, who will be submitting their final resolution plans in this matter within the next 4 to 6 weeks. Now, Electrosteel Steels was one of the 12 large corporate accounts which the Reserve Bank of India had flagged off to bankers and had asked them to take to the NCLT for immediate action under the Insolvency and Bankruptcy Code. The total exposure for the financial creditors in Electrosteel Steel stands at close to 13,000 crore, which is a large asset, and the bankers will be looking at ways to try and restructure these assets and probably sell this company to a potential bidder who will then turn around the company and be able to pay back the lenders. Now, the bankers have been trying to sell these 12 large corporate accounts to potential bidders, and they have had a bit of success in terms of expression of interest coming in a number of these cases from not only domestic but also international players. SR Steel and JP Infratech are the cases in point. Now, Electrosteel Steels as a case in its history has had 2 attempts of debt restructuring, and both have failed because the bankers were either not able to restructure the debt properly or not find potential buyers who would maybe take over the company and turn it around at a reasonable price. Through the insolvency and bankruptcy process, that is what the bankers will be looking for: a reasonable price at which they can take a haircut and therefore sell the asset to potential bidder.
India's largest pharma company, Sun Pharma, came out with numbers after market hours yesterday. Inline set of numbers. The revenues were slightly below what we were anticipating, given the fact that the other operating income was much lower this time around. Margins came in line with what we had anticipated. EBITDA at 1375 crores versus our estimate of 1375 crore. Profit was much higher, given the fact that the tax rate was much lower, 10% versus 15%, and the other income was much higher this time around at 225 crores. Geographically also did in line with what was anticipated. India was up almost 11%. US was down almost 44%, given the fact of an exclusivity of a drug last time around. The other markets grew in double digit, which is fine. Now, the management conference call did indicate that they believe that there will be challenges as far as pricing is concerned going into the next half, but they believe that they expect the second half to gradually improve for the company. As far as the updates on Halol is concerned, they have said they have no new updates to share on Halol. They believe that awaiting the US FDA reinspection to happen, and till the time this happens, they are unlikely to get any kind of new approvals from Halol, but they've already started process of shifting out some of the products out of Halol. Finally, as far as guidance is concerned, they have maintained their guidance, but maintained that environment is rather challenging. So 20 to 22% EBITDA margin and a single-digit revenue decline is the guidance that they have maintained for FY18.
GAIL India for the second quarter on a standalone basis reported an operational strong numbers with higher on the back of higher volumes. Our revenue was higher by around 9% to 12,410 crore rupees, while net profit jumped by around 28% to 1,300 crore rupees. EBITDA also rose by around 9% to 2,069 crore rupees, while margins remained flat at 16.7%. Now LPG sales volume rose by 9%, but overall the segment was weak because of lower realizations. The EBIT margins for LPG segment contracted by around 580 basis points in the second quarter. Now transmission and petchem on the other hand showed good growth. EBIT margins of the transmission and the petchem segment expanded by around 760 basis points and 310 basis points in the second quarter on the back of higher volumes. Petchem volumes rose by around 34%, while transmission volumes were up by around 6%. Gas trading volumes were also high by around 8%, which boosted the gas trading segment. Overall in the second quarter, higher other income and marginally lower tax expense also boosted the net profits.
Well, on to some stocks to watch based on the cash volumes that they delivered yesterday. First up, Vakrangi. The stock was up 5% after it got included in the MSCI portfolio. Saw delivery buying in excess of 200 crores. The delivery volume nearly doubled at 32 lakh shares versus the 10-day average, and the total volume too surged nearly 100% at about 56 lakh shares versus the 10-day average. Tata Global Beverage is the other stock to watch out for. Saw some bit of trading action come about for itself. The stock was up more than 5% yesterday, saw delivery value in excess of 55 crores, and the delivery volume surged more than 20% at 25 lakh shares versus the 5-day average, and the total volume nearly doubled at about 1.8 crore shares versus the 5-day average. Petronet LNG, the final stock, it was down 2.5% yesterday, saw delivery selling in excess of 100 crores. The delivery volume was up nearly 60% at 50 lakh shares versus the 10-day average, and the total volume to surge about 40% at nearly 78 lakh shares as compared to its 10-day average.
On brokerage today, we have is Antique Securities on Sun TV. Now, they have initiated coverage on the stock with a buy rating and a target price of 1070, which indicates a potential upside of 25%. Now, Sun is expected to outperform on the back of recovery in ad revenue, strong domestic subscription revenue, and turnaround of its IPL business. Now, the brokerage is expecting recovery in ad revenue to start from the second half of financial year 2018 on the back of companies' renewed focus on market share. Now, they're expecting the ad revenue to grow at a compounded annual growth rate of 10% over FY17 to FY20. They are also expecting the domestic subscription revenue to grow at a CAGR of 20% over FY17 to 20 on commencement of digitization in Tamil Nadu. The IPL business, which was a loss making for the company, is expected to turn around and turn profitable, which will also aid the EBIT margins of the company. And on the back of this, they are expecting the EBIT margins to improve by 200 basis points from FY19. Overall, they are expecting the net profit to grow at a CAGR of 18% over FY17 to 20, and on the back of this, they're expecting the stock to re-rate from current levels.
Here are a couple of stories that you should consider reading on the website bloombergquint.com. First up, Indians got wealthier faster than their peers in most countries in the year to June. The country added $451 billion to its total wealth during the period. That's a yearly rise of 9.9%, at second only to the 10.1% growth seen in the US. But it still contributes only a small amount to global wealth. As many as 141 initial proposals for air services, including operating aircraft and helicopters on 502 routes, have been received under the second round of Regional Air Connectivity Scheme. Civil Aviation Minister Ashok Gajapati Raju has said that the second round of bidding saw a good response and that 17 players have come up with initial proposals. And there's more agricultural land in the world than previously thought. And India, rather than the US and China, is now believed to have the biggest acreage of any country. That's according to a new study aimed at improving food and water security. And now let's hear from Shrikant Chauhan of Kotak Securities and Richard Jain of Angel Broking on their outlook for the Nifty.
No doubt that there is a huge amount of selling pressure which is going on in the market. The short-term trend is weak, but because there is an over-retracement, the way like market was like at one point of time, it was down below 1,000 10,180, but it recovered back. So today, if there is a gap up opening and if we see like the market starts sustaining about 10,200, then certainly it will be a big positive for short-term traders, because in that case we may see a sharp pullback to the current retracement of 10,490 to 10,180 kind of level. So yes, definitely till the market is about 10,180, I think the markets are like going to recover in next few days of time.
Still believe that the entire corrective phase that we are seeing in last few trading sessions is likely to continue going ahead. Now, since we have resisted around 10,000 we have made an important higher and 10,500 mark. This is a time-wise correction as well, so we won't be in a hurry to climb the new highs very soon. I think one should take a stock-specific approach at the moment rather than going much aggressive on the index front. As far as tomorrow's trading session is concerned, initial half an hour or 1 hour would be much crucial. If the index sustains below 10,180 mark, then I think this retracement pullback which we are seeing is going to get very deep. So it would be much depends upon how the first half an hour or first hour would pan out to be in tomorrow's trading session.
Well, that was all you need to know going into trade today. Up next is what promises to be an action-packed Indian Open, so do stay tuned. This is Bloomberg Quint.